Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading for law. It is Wednesday, June 3rd. First and foremost, all glory to the Most High God. Let's bow our heads for a quick prayer. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to learn, to try again, and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, we ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. Can the church say amen? Amen. Let's begin. Before we jump into the charts, I just want to say this. There was a time I used to sit down on the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realizations. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And at I'm the Trader Capital, our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, as the fund manager. It's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are 2 types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At I'm the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. Weekly target going to this week is 3% as usual. All right. Mental check-in, feeling generally okay. Excited to see what price action has in store for us today on this NFP Wednesday. Excited to continue to grow, all right, and get 1% better. I feel like I'm seeing the result of like the 1% compounding each day, each week, and just each month, and I'm starting to see it. It's all like coming together, and it's beautiful. It's nice. I'm enjoying it. But anyway, yeah, nothing of note really to mention, really and truly. All right. I acknowledge any risk that comes with trading today. I understand that trading comes with real risk, and that losing is part of the battle. All right. It's Wednesday, June 3rd. All right. We're already in June, halfway through the year already. Oh my goodness. News. We have medium impact news come out at 8:15. More medium impact news coming out at 10 and 2 p.m. today, and we have high impact news at 10:30. All right, so we have news today, making it an optimal day to take a trade. This is the last day for regular trading, all right, and then starting PM session today, all right, we get into the wild west, pew 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 pew, where anything goes, all right, because it's NFP week, all right, not for professionals. It gets a bit crazy after PM session of today, okay? So if you don't have at least 2 years of experience, all right, be content with finishing with this morning, all right, and leaving the rest of the week alone, all right? That's it. You don't touch that, all right? Okay. Risk going in today is usual 0.25 of account size, and we have a max of 0.75 per account per day, all right? Weekly program going to this week. It hasn't been established. Was it established? I believe we took buy side yesterday. But anyway, let's go ahead and confirm. What is going on here? I believe we took buy side Monday's range high. But like I said, trust but verify. It's risk management Wednesday. Today we're talking about the holy grail of trading. The holy grail of trading. If you've ever been in search of a holy grail, which I have been, all right, it was right under my nose the whole time. All right, it's risk management. Anywho, we've taken Monday's range high. Okay, so we've confirmed our weekly program as a buy program. All right, we are in a buy program for the week. Let's go ahead and adjust our ranges, our higher time frame ranges. And same thing, just a different day. Nothing changes round here. Let's get our 20-day adjusted. Need to adjust the low. I believe, yep, this is the candle. The market is ever so moving, all right? So I'm moving with it, right? I'm adjusting and I'm moving with it. It's alive and breathing, so I'm doing the same thing it's doing. I'm tracking it. I'm identifying it. All right, so that's done. Let's get into yesterday. We did close the stream before we saw the outcome of the trade, didn't we? Yeah, because it was just taking mad long. And I ain't had time, man. I was on this thing for like 2 hours, 30 minutes. I ain't trying to, make these things so long, but bloody hell. Anyway, it ended up hitting target. Ended up hitting our target about almost 2 hours in that trade. It was a mad thing. It was a mad thing. And yeah, I did take another trade. Was it lunch session trade I took, or was it PM session trade? No, well, it was definitely lunch. Oh no, I didn't take any other trade. I was done. I was done with the market after in the morning. But there was, I did see a few setups during lunch session, PM session. I didn't really see nothing too enticing that I would have engaged in based on that morning's opening range gap. Okay. What I am noticing is that when we do get a small opening range gap, is usually the setup is usually during lunch. Okay, we usually get a cleaner setup during lunch. But that's just 2 days of data. Okay, I need to obviously collect more data with that, so I can, you know, have trust and faith in it. But yeah, we did end up hitting our negative one right here during lunch. Okay. Did they give us anything more? Anything more? Anything more? Okay, ended up, oh well, would have come and taken this out here actually, so scrap that. No, actually, wouldn't have. Entry is here. Entry was here. Oh yeah, would have come and smashed this out. That boy, yeah. No denying that. No denying that. Anywho, let's proceed. We proceed to give you what you need. I know that's from somewhere. Step 1, condition, right? Condition, determine bias. In order to do that, we must first identify our dealing range. For us here, for me here anyway, all right, personally, I go from 12 a.m. to current price action. Note the lowest low, which is currently London session sell side. To highest high. Then we've got our dealing range. Now we just wait for one side of that to get taken, which will give us step 1, our condition. If buy side is taken, okay, we're in a buy program. If sell side is taken, we're in a sell program. All right, above dealing range, I don't believe we have any other price above it because it is currently all-time highs right now. Okay. Below dealing range, we got Asia session sell side. Below that, we've got previous week's high. And then we have AM session sell side from Tuesday. So where's previous day's low then? That's it's far, huh? If you're going based on previous day's range, right? We've already taken previous day's high. All right, so you already be coming into this session in a buy program, okay? That's if you're basing your condition of previous day's range. For me, I can frame entry setups around those higher time frame external liquidities, but I don't use it to determine my condition. All right, I like to know my condition for the day using the price action from that day, you know what I mean? But that's just a personal preference from what I found from my back testing. That's what I am attracted to. But that may not attract you, you know what I'm saying? Solo sport here. And now we wait for kickoff. Hopefully we get a decent size open range gap today. Okay, it ain't big, but it's okay. It's more than yesterday for sure. All right, open range gap is below price, so we gapped up. So we have a premium gap up. Set alert. Make sure I'm on the account I want to take a trade in. Yep. Slowly but surely crawling out drawdown there. I think I've only traded that account this whole week. It's only been 3 trades anyway. Yesterday's stream was really good. I feel like I dropped some really good stuff there. Not to toot my own horn, toot toot, but that's information that I wish that, you know, I was getting given when I got into this industry. I think I would have been further ahead than I am, but which is fine, and I'm not feeling no type of way about my journey. All right, everyone's journey is different. I had to go through what I had to go through to get me to where I am today. So, but you know, if I could do things differently, I wish I knew those information. Looking like we're about to take dealing range buy side here. Let's get this thing up and going. Hold on, hold on. All right, smashing dealing range buy side. All right, our condition has been established as a buy program going into today. All right, we're in a buy program. We're looking to be a buyer of this market. Da, 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 da. I'm loving it. Uno momento, por favor. We are on the holy grail of trading. Let's get there. Right here, right here, right here. If I see something here, I forget set up. I'm on the account. I can take a trade on the 30. So eyes peeled out. This account can take a 30 trade. Save the macros for the other two, you know, because I haven't taken the trade on them this week. You know what I mean? Looking like somewhere in the 5 second we took buy side, market structure shift here, down here. This would be a V-shape retracement setup here, but I'm not really interested in that right now. First couple of minutes, all right, of opening, I'm not really too eager. It has to really stand out, I mean, for me to be interested. With the first couple of minutes of opening, it has to really like pop, you know, it has to be like in your face. Right now, I ain't too pressed about the price action. Not in a rush to do anything. Not in a rush at all. Well, how much is getting an alert on this thing right now? Delayed like a motherfucker. Like a motherfucker. We're about to have a reversal here. Do your thing, price, do your thing. You just snatch that liquidity and boom, straight away it's going to the other side. Reversal, retrace to reverse is what we're seeing here. do trade to and through open range, dealing range sell side, obviously that will flip our buys from buys to sells. Risk management Wednesday. Okay, why didn't I get an alert there? All right, smashing through dealing range sell side, bias. Bias has flipped from buys to sells. Okay, sell program. Below we have Asia session sell side. We have previous week's high. Sell program going against our weekly program, right? Of being in a buy program. Be aware of that. If we come down, we take sell side here. That will be a continuation sell setup. But for right now, nothing to do. %80 of this job is just waiting, really and truly, all right? Which is it's hard to do, right? Impatience creeping, creeping. Oh shit, creeps in, and that's where we lose 90% of the traders that fail. You know, impatience, just wanting something to happen. Only if he gives it. It might not. We talking the holy grail of trading today. The secret weapon. The shield. Your only shield in this industry. On this battlefield. Waiting to pull the trigger here. As long as it confirms that market structure shift. He has to trade to it and through it. There we go. Pulling that trigger. In there like swimwear. It's out my hands. Just go let it do what it do. Just delete that. We're looking at 9675 right there. Cool, cool, cool. It's out my hands. Okay. It's in the market, the model, and the trade management's hands now. Alright, bread and butter. It would have given us bread and butter already. Now, these are the kind of trades that we like up in this bit. Not the ones like yesterday, where we waited 2 hours to see it do something. You know what I mean? Like, even now, even if it comes and takes me out, at least it's quick and painless. You know what I mean? Quick and painless. That's just how I like it. Anyway, we're taking sell side below it. This is the high that needs to go for me to be interested in a retracement setup, okay? So until we take this high, right? Nothing for me to do here. Thank you very much. Thank you very much. Just like that. We appreciate it. That's what I'm talking about. Decent size. It wasn't, you know, a big open range gap, right? But it was decent enough. It wasn't like non-existent like yesterday. Anyway, 139. Humble beginnings. Humble beginnings. I'm done with this account though, because it's taking like 4 trades this week already. It's on a mad one. Let's move on. Let's give other people a chance, mate. Oh, hold on. Let me do something real quick. Don't be selfish. Don't be greedy. We know you're in drawdown, but, you know, it's not all about you. It's not all about you. Let's see what else this trade is going to offer us, okay? So we're paying attention. Obviously, if we have more contracts, right, we would still be in here, but we don't. It is what it is. Take it for what it is. For where we're at right now. and we keep it pushing. It was a continuation sell setup there, all right? That's what they look like. We talked about them yesterday. Well, yesterday was really based on highs because that's where we was at. But it's the same concept, okay? I don't want to say it, but I think we're on some sort of a roll here. I don't want to say it, but I said it. It's gonna become like my journal because I've been slacking on my journal type shit. -1, right? Would have given us negative 1.5. All right, we're back at previous week's high. All right, holy grail trading. Now that we've got something, a trade in the bag. -2 getting smashed there. Woohoo! Targeting Tuesday's AM session sell side, which is currently next liquidity below price. And below that we have previous daily low. All right, should price want to gravitate that low, that will be the next draw. But for right now, all right, depending on how price behaves here at previous week's high, all right, will let me know whether it wants to continue lower to take AM session sell side from yesterday. Now we can flip this account because it may not have time. Let's give other people a chance. $9.50 macro. For a continuation or for a retracement setup here, hold on, using buy side, just looking at my thing for a second here. You'll need to come below, buy side below, inefficiency below, market structure shift back above. All right, but here will have to be a liquidity above to market structure shift below for a retracement. Okay. like what it's doing right now. This on the 15 seconds, right? It's confirmed a continuation setup on the on this time frame, right? Which would be a retracement setup based on our current day's dealing range condition, right? Which is a sell program. So buying, right, would be a retracement, and selling would be continuation. So right now I'm watching this on the 15 second, this continuation based on previous week's high, but retracement based on our daily condition. Not sure if it would have tagged us in there. I'm not sure if it would have tagged us in. I'm not sure if this, once this candle traded up 2 and 3, it came back down before closing. Wasn't paying attention. So I'm watching it though. Not for me. But anyway, back to the holy grail of trading, all right? My mentor, Michael J. Hudson, said this about risk management, okay? This is the most, I can't even read. This is more important. Why did it say done? I got done twice. Let's edit it right now. Because why did it say done twice? Stop with that. He said, this is more important than my entry and my exit signals. This is the absolute key and cornerstone to long-term success in trading. All right. This the guy has been in the markets for over 30 years. All right. He's got the experience. He's the one that taught me everything that I know. And this is what he's saying about risk management. Okay. This is what I believe it is the holy grail of trading, right? When we get into this, we search for holy grails in terms of our models and strategies, thinking that we're going to find a holy grail strategy that will just never lose, right? It will just never lose. It'll always be winning. But we know when we step into this arena that the only two things promised to us are that we're going to take a loss and we're going to take a series of losses, okay? So the thing is the only guarantee in this game, right? And risk management is the holy grail of trading. Like, you can flip a coin, buying and selling, as long as you manage your risk, all right, you'll be profitable. It's simple. Like, we overcomplicate trading for ourselves, all right? It's all about managing risk, okay? Managing drawdown, because losses are the only thing promised to us, okay? When it comes to trading, all right, when it comes to this arena, on this battlefield, there's only two things promised to traders, all right? One is that every trader will encounter a losing trade, right? We talk about this all the time, right? Every trader will experience a series of losing trades. These are the only two things promised to us here. These are the only promises. Just like in life, the only two things promised is death and taxes, right? In trading, right, in the financial markets, in speculating, in investing, right, these are the only two things promised to you in this industry, right? Every trader will encounter a losing trade. Doesn't matter your model, it doesn't matter what you do, right? You're going to encounter a losing trade, and every trader will experience a series of losing trade, right? It's about preparing for those losses and managing the losses, all right? Capital preservation, risk management is our number one job here. Hold on, let me find it. So it's right here. So in this topic, all right, we're gonna go over the holy grail of trading, the mistakes and what to avoid, all right, how to conquer fear of losing, and show you the limitless potential, right, in trading, so you don't have to worry about losing, okay, be fearful of losing, and how to mitigate risk and flatline equity drawdown, all right. You don't have to have a swing in your equity drawdown, right? That's not what we want to see as traders. That's not what we want to have happen, all right? You want a steady equity drawdown, all right? Especially if you're going to scale into a hedge fund and take other people's money, okay? Investors don't want to see that swing up and down in your equity drawdown, all right? They want to see a steady increase, steady drop, steady increase, steady drop, all right, in that equity drawdown. So we're going to show you how to mitigate risk and flatline your equity drawdown, all right? You get flatten it. Nothing for me in the charts right now, okay? It is 9:50 macro, all right? We have time, but I'm not seeing price, all right? I'm not seeing price where price is at. Well, we have price here, previous week's high, but nothing really is happening around it for me to be intrigued in this price action, okay? But setup that we took at 9:30 would have given us -2 so far, and stop would be reduced to 0.5 of the range here. The holy grail of trading, risk management. Don't argue with me, argue with your mama. When you step into this trading arena, financial markets, right? You're competing against central banks, the titans of this world, right? You're competing against central banks, institutions, and professional traders, right? Entities that are not in the business of losing money, right? Just like the central banks didn't create this casino for us to make money, or, they didn't create it to also lose money either, right? They created it to cannibalize us, right? For them to have control and keep all the money, right? He who controls, is it money and food? Yes, money and food has all the power. All right. I think that's how it goes. Trust but verify. Do your own research. In trading, risk management is your edge, all right? It is your shield, your only defense against the central banks. This is the only aspect of the game, of this battle, that you have control of, okay? In this game, right? Nobody controls it for you. This is the only thing that you control, all right? It is your shield, right? You cannot control the market, but you can control how much you risk on each trade, okay? This is your only shield on this battlefield, all right? If you're going to war, right, you need something to defend yourself with, and risk management is what we use to defend ourselves on this battlefield, okay? It's very imperative. If you don't have a shield, right, it's easy for somebody to attack you, right? It's easy for somebody to attack you and just deplete your account. That's it. It's easy for IPTA to attack you when you don't have a shield, right? This is your only shield against IPTA, against the central banks, against the professionals, the people that know what's going on here, the small group of people behind the scenes that we talked about yesterday. This is your only shield against them, all right? So it's important, right? It's important that you have risk procedures in place, all right? So you have to control the amount of risk in your account, right? If you do not do this, no one is doing it for you, and you certainly will lose in this game and on this battlefield, right? You will lose, right? So how should you be looking at risk, and how can you manage risk to survive and have longevity in trading, okay? You need to understand that. No, you don't. This is old. This is old. This is old. Okay, so you need to understand the two things promised to traders that we just talked about, all right? You need to understand the two things promised to traders. And now that you know that, right, and understand that losing is the one thing promised to the traders, right, you need to have a plan and procedures in place to weather losing trades. That's our number one job here. Hold on, we're coming up to 10 o'clock. I need to get open range, dealing range in here. She's a multitasker. We can do it all here. We can do it all. Working on my material. Oh, that's a big ass open range. That's a fat ass opening range we got here. So we traded back 2 through it, all right? I'm not really feeling that as a V shape, but it technically classifies as a V shape, right? I would like some more oomph in that price action though to get to that market structure shift above here. I would like some more oomph and the price coming to take this short-term high here. can watch it. I can watch it and feel no type of way. I can watch it. It's all good. If it goes without me, it goes without me, right? But I would have at least liked to see also it create inefficiency in this price leg here. It's a valid setup though. It's a valid setup, but for me right now, it doesn't intrigue. It doesn't entice me. It's just a personal choice. It's a personal choice, but this is continuation based on previous week's high. Is it though? Yeah, it is, because it's a V-shaped continuation, because we traded to it and through it and then displaced back above market structure shift. Yep. So continuation based on previous week's high. If you're going by today's condition, right, we're in a sell program, it will be a retracement setup. Okay, so that's how the external levels, right, they work together, right, to kind of give you a complete picture of price and potentially where it's heading to next. So we're watching this right now. We're watching this. I don't have to be in every move, you know what I mean? I don't have to be in every move. And that comes with mastering yourself. Okay, we would have got an entry there. So let's see what it do. Cool. I'm watching it. Obviously, this will be going against our daily condition of being in a sell program. We come down and take sell side here. I would be interested in a continuation sell. It looked cleaner on the supporting time frame, right? It looked more like a V-shape setup. This is what I would want to see on the 1 minute. What I'm seeing on the 15-second. Boom, boom! Look at that wick, right? Look at that wick, and then it just shot up straight up. Market structure shift up here, right? It looks much cleaner on the supporting time frame. And how I could have used that. Is potentially maybe once this confirmed the V-shape setup and then we took buy side on the 1 minute here, okay, it would have been a supporting actress to the 1 minute right here. Okay, so I'm watching it. Let's collect the data on it. You still wouldn't have, you would have got bread and butter on the 15-second time frame, but nothing really much more. You wouldn't have got -1 yet. So we watch and let it do its thing. This is what tape reading is, right? This is what tape reading is. You anticipate and you watch with no attachment behind the trade, no button pushing, okay? None whatsoever. I don't think it still would have given us -1 with that push there. Yeah. -1's above equilibrium of dealing range, open range, dealing range. So far, respecting this inefficiency and this order block here. So planning for losses is key to survival here in this battlefield, right? A well-structured risk management plan prepares you for the inevitable losses and protects capital, which is our #1 job, capital preservation, okay? Live to fight another day, right? You don't want to die on day one of the fight, right? You don't want to die in one day. You want to die slow, death by 100 cuts, right? That's how we want to die here, okay? Not that we want to die, but if you're going to die, die by 100 cuts. You're going to have losses, all right? Control them, and over time, you're going to make more money than you lose. Before you start planning for, procedure and protocols and planning and putting some plan together for your risk management, right? You must first know the common mistakes and what to avoid when it comes to risk management. These are the mistakes that majority of new traders make, all right? That it's not it's not favorable to their account, right? It's not favorable to their account. So you need to know what the mistakes are, and so you can avoid them as much as possible. Just like you need to know the pitfalls that causes 90% of traders to fail, so you can avoid those pitfalls, right? When you see that pitfall, you be like, okay, I know what this is. I'm gonna step around it. I'm gonna make another way, and I'm not gonna fall into this pitfall, right? Right. These are things that obviously we're not perfect, right? We're gonna make mistakes. You're gonna sometimes make these mistakes, right? These common mistakes, and it's important to be aware of them and be like, okay, hey, this is what I'm doing. I need to adjust it, right? I need to put a procedure and protocol in place that when I'm feeling like this, it doesn't lead me to falling down into one of these common mistakes, right? I've still to this day I make some of these mistakes, but I try. It's not a constant thing, right? It's not a constant thing. It's like once in a blue moon. Okay, one of these things will like creep in, and that's normal, all right? It's part of the battle. It's part of the game. We're fighting ourselves each and every day. Okay, so it's okay if you make these mistakes, right? But don't make it a consistent thing, right? Don't make it a habit of it. Anywho, first common mistake. So far, this trade is looking good. It's not giving any characteristics that it's offside. All right. So far, is looking like I would have been onside. So we're watching it. We're watching it. All right. First common mistakes and what you need to avoid when it comes to risk management is over leveraging. All right. Risking too much on a single trade. All right. Don't try to rush profits. Right, because that's what we're in here to make money, and we want to make that money like quickly, but it's not gonna come quickly. All right. Fast money ain't fast money, right? It's not. It's not. What's the word I'm looking for? It's not realistic, right? It's not realistic. This is the hardest, hardest thing to do in the world, right? Don't come in here thinking that you can make quick money, right? It's not quick money here. It's slow and steady money here, right? So over leveraging, that means risking too much, right? Risking too much in a certain trade, trying to make a big profit, right? Trying to make a big profit when you're not even ready to make those kind of big profits, right? You work your way up gradually, eventually you get there, right? So over leveraging, risking too much on a single trade, right? Next is no stop loss or take profit, right? Not a predefined trading without a predefined exits, right? This is what invites fear and greed, right? And fear and greed is a number one killer, is a number one reason why traders 90% of traders fail, right? Fear and greed and emotions, right? And that comes with not having predefined exits. With me, I know how much I'm risking. I know where my stop is going. I know where my entry is. I know where my partials are, right? It takes the Tell me that my mic wasn't on. Whoa, that's wild. Been chatting to myself. That's crazy, my guy. Now I know that you don't be listening. Okay. That is some wildness, man. Just been chatting to myself. That's crazy. That is crazy. It's all good though. It is what it is. You missed it. You missed it. Anyway, I was talking about how I can incorporate how my supporting time frame, right, could have added more confluence, all right, being a supporting actress to the 1 minute setup right here that I wasn't quite feeling that, V-shaped setup, okay, but it was very clean on the 15 seconds, okay. Once you confirmed on the 15 seconds and then confirmed on the 1 minute, all right, should have been like, okay, it's not clean here, but your supporting actress says, yeah, this is what we're going, and then the 1 minute confirms it. So that's how I can incorporate the 15 seconds, my supporting time frame, all right, into my entries and my setups, okay. -1 was up here, so I'm waiting to see if it gets hit. If it doesn't give me -1, it's not worth me collect the data. It's not worth the data, right? It has to give -1. Supporting time frame would have got -1 already. We'll be heading to -2 on that time frame. So not bad, not bad, not bad. -1 for this was up here somewhere. Okay, so waiting to see if it gets hit. If it gets hit, I saw a retracement set up here on 15 seconds as well. External liquidity, all right, dealing range sell side. We took sell side below it, a short-term low. Market structure shift back above it right here. All right, this confirms a retracement setup. Obviously, if these are characteristics I want to see. If I was in this buy, right, this would have obviously confirmed, hey, I'm on side currently, all right, and there's nothing for me to do. All right, price is showing me that I'm on side. That's how I'm going to be using that supporting actor, all right, in terms of when I'm in a trade as well, okay. Like I said, this week I want to incorporate the 15 seconds more. I back tested it just the weekend that just passed, all right, and I want to start incorporating it more into my trading, all right. It's not just on the chart to look pretty, all right. I need to put it to work. Anyway, I don't know if you heard anything that I was saying about the common mistakes. I don't know if I went through like 3 already. I don't know if you heard anything, but we'll recap it real quick. Over leveraging, risking too much on a single trade. Don't try to rush profits. Okay, no stop loss, no stop losses, and take profit. Now, trading without a predefined exit. All right, that's what invites fear and greed. All right, these are two things that causes 90% of traders to fail. Right, when they bring emotions like fear and greed, when you don't have a predefined stop and a predefined exit, you're just like fearful of what is gonna come hit your stops, and you don't even know when to get out. Right, it just brings too much emotion. You need to think logically, and you need to think algorithmically alongside IPTA. Okay, because that's how she's moving. Okay, the next one was revenge trading. All right, trying to win back losses with bigger trades. Avoid chasing large profits, like we talked about the first time. Over leveraging to trying to, rush profits, right? So revenge trading is like when you take a loss, okay, and you like try to go back into the market with a higher leverage, all right, trying to make back the loss that you just took plus more, right? I've done it so many times, all right. I know how it goes. I've been there. You're not special. It's not gonna happen for you, okay? So you're not special. I'm not special, okay? All right, it's that simple, right? Yeah, revenge trading is something that's easy for new traders to fall into. I've been there so many times, right? I'll take a loss and I'll be like, oh damn, the market took something from me, right? I'm gonna go in more right? Trying to make back the losses plus what I originally wanted to make in the first place. And we all know how that goes. It leads to blown accounts, all right? It leads to quick way to fast track to blown accounts, all right? Fast track to blown accounts. Next is focusing only on winning trades. All right, ignoring the importance of managing losses, right? Because we know that's the only thing promised to us here. Now I have to like double check my shit is on all the time. That's the only thing promised to us, right? So don't try to focus only on winning trades, right? For me, I would have to say personally, my growth, the most of my growth has really come from the losses, right? As many, that's why I say in the beginning, take as many losses as you can on demo, though obviously with no attachment to you, no effect that you're going to lose anything on demo. Take as many losses as you can, because it's out of the losses is how you learn and how you grow. I'm speaking from personal experience, right? Every time I experience a series of losses, I know that growth spur is coming. Why? Because I go back into them losses and I extract the information I need to extract for the trade. Okay, why did this trade lose? All right. What was the characteristic that price was given that would have been like, okay, hey, I'm potentially offside, all right? What time did I even take the trade, right? The most important thing in trading, time, right? What time did this trade form, all right? And what time did I enter the trade? And why did it lose, right? Don't only focus on the winning trades when you're winning and I just want to focus on the winners. Forget the losers. I don't want to look at the losers. It's out of the losses is where your most growth will come from, okay? So lose as much as possible and focus on the losses, right? Extract all the information you need to. Focus on both winners and losers, right? See the common similarities in the price actions of both and extract what you need to extract from that information, all right? So you can refine your procedures and your protocols, all right? So only focusing on winning trades, that's a common mistakes and that you need to avoid, all right? These are common mistakes and something that you need to avoid when it comes to trading and when it comes to risk management. Not adjusting position size, keeping risk constant, okay? Failing to reduce risk after a loss or series of losses. Okay, this is where that flatlining equity curve comes in, right? That equity curve comes in at, okay? So you don't want to just be taking constant losses at the same leverage, right? You want to reduce risk as you're taking losses, okay? As you're taking losses, it can be one loss, it can be two losses, it can be three losses, but you need to be adjusting that risk, right? You can't keep risk constant, all right? That's also another fast track, right? Fast track to a blown account, okay? Another fast track to a blown account. And remember, our job here is capital preservation, right? We're here to protect our capital. We're here to trade another day. We're here to fight another day, right? Avoid short term into long term, okay? So holding losing trades and winning trades, all right? Hoping, right? Holding losing / winning trades for too long, hoping the market will turn. All right, so let's say you're in a trade, is coming to your stop loss, but you're like, no, I see the market going up. All right, it could just be coming to take down this low. So let me move my stop down a little bit, and we all know the storyline, right? It's like a movie we've seen over and over and over again. We know how it goes, right? Also on the other side, holding winning trades, right? When the market is moving in your favor and you get overconfident, you're like, oh, it's going to keep going up. It's going to keep going up. It's going to keep going up. So you keep adjusting your take profit, right? And if it comes out right back down and takes you out, right? When you had a lot of profit and you could have just got out of the trade and just took your winner, right? Depending on what kind of trader you are, don't if you're going to be a day trader, right? Don't try to hold trades over a long time because you think the market is going to keep going in a direction you think is going to keep going in, okay? Take what you get and be content with it, okay? Take what you're there for, all right? Take your small bite and come back another day and take another small bite, right? It's not about taking big bites every day. Those big bites will come eventually down the line, right? When you gain more experience and you have more data behind you, okay? Don't assume taking small defined risk trades will not. Hold on, let me read that again. Don't assume that taking small risk defined trades will not grow your account. Did I read it right? Yeah. Don't assume that taking small risk defined trades will not grow your account, okay? Think about compound interest, right? You don't need to win big each and every day. Like I just said, it's about taking small bites, out of the apple. All right, small bites out of the apple, and then coming back and taking more small bites. Okay, it's not about trying to make your monthly earnings in one day, right? You obviously eventually you work your way towards there, but initially starting out, all right, don't try to do that. Okay, taking small surgical shots, right? Small surgical shots, all right? That's how you get your job done here. That's how you survive, and that's how you beat these titans, okay? Also, risking capital you cannot afford to lose. Risking capital you cannot afford to lose. I've been there when I started, all right? I was just like, I would work, like I would do Uber for like a couple weeks, right? Earn like $500, and I'm putting that $500 in the account, and I'm trading it. This is all shit that I've done before, right? I've fallen into these common mistakes, and now I avoid them like the plague. I avoid them like the plague. All right, but don't risk capital that you cannot afford to lose, because once you come in here with that mindset that, okay, this is all I have, and I need this, I need to make money to pay my bills, this is all I have left, right? And I cannot afford to lose this. That's when you're bringing emotions, you're bringing fear, you're bringing greed into this, and that's another fast track, right, to blowing accounts and losing. And this is why we lose 90% of traders, right? And I don't want that to continue, right? This is the game. This is where you need to be, right? This is where we all need to be. This is where we need to be thriving. This is where the money game is played, right? If you're trying to get money, right, you need to be here, all right? And I don't like that statistic that 90% of traders fail, because this is it. I mean, in my opinion, this is it. All right, it's my goal, all right, my mission. I've made it my mission, all right. I think this is what God put me on here to do, my mission, right, to help the 90% of traders who fail, right? So we can have more people on the other side, all right, to the 10%, and eventually, obviously, work our way to the 1% club, right? Yeah, don't come into this gambling, all right? Don't come into this gambling. It is a casino, and if you do gamble, you will lose, right? It's simple as that, all right? Lastly, don't look for others to measure against. Trading is a solo sport. Often, too many times, new traders, all right, they're looking outwards, right? What other people are doing, right? You don't know what people have been through to get to where they're at. You don't know what's happened in their life or what in their trading, all right, for them to be where they're at. So don't compare yourself to other people and their journey and what they're going through, right? It's a solo sport. It's just about you and only you, right? You're fighting you each and every day. It's me versus me, all right? Not anybody else. Don't look for other people to make. Okay, look for motivation and inspiration as to what is out there, what they've accomplished, and what's possible, the possibilities, all right? But don't compare yourself to somebody else, right? Like something that I used to fall victim to, all right? Like I'll look at other traders, I'm just like, oh damn, they're making money, they're making a lot of money, and I've been in this for like 4 years now, and I'm still not making any money, right? That's not how it is. Everybody's journey is different, right? We all have our time, we have our season, right? It's not our plan, it's God's plan, okay? And if He's not ready for you to attain the skill, then you're not ready to attain the skill, right? You need to work on yourself first, work on your relationship with Him, all right? And then He'll give you, when it's your time, right? When it's His time, when He feels like it's right for you, right? He'll give you the skill set, okay? He'll give you the skill set. But these are the common mistakes and what you need to avoid, right, when it comes to risk management, okay? So over leveraging, no stop loss, take profit, revenge trading, only focusing on winning trades, not adjusting positioning size, keeping risk constant, all right? Avoid short term into long term, all right? When you're holding, you have a predefined target, but you think the market's going to continue going, so you adjust those. Same for the other way, right? You think the market's going to continue, so you adjust your stop loss, all right? Don't assume that taking small risk-defined trades will not grow your account, right? Focus on compound interest. That is the eighth wonder of this world. There's 7 wonders, but there's also 8. There's an extra bonus one, right? And that is compound interest. Risking capital that you cannot afford to lose, all right? Avoid these like the plague, all right? Don't look for others to measure against, all right? Trading is a solo sport. So these are the common mistakes in risk management and what you need to avoid, okay? Now that we know that what the common mistakes are and what we must avoid, right? How do we conquer the fear of losing, right? And what is the potential, right? What is the limitless potential in trading, okay? This brings us to risk to reward ratios, right? I'm not a huge fan of risk to reward ratio. It's not something that is a make or break for me in my trading. Okay, but I think initially starting out is important. Okay, but obviously you can eventually graduate from it if you want to, but you don't have to. Okay, but starting out, this is for like somebody coming in new, no experience, less than 2 years of experience. Okay, I think it is imperative that you use risk management. I mean risk to reward ratio. Okay. The importance of risk reward ratio in trading and how it helps to conquer the fear of losing. We would be hitting -1 right here on this setup, so it was validated. Okay, it's giving us, let's see how many contracts it would have allowed us anyway. Now that's good data right there for me to collect, right? That's good data, because at least he would have given me -1, and that's all I ask. And just like that, cool, one contract will be out already. Okay, so this initial trade gave us -2. Now we're seeing what this trade does. All right, and what would have obviously added more confidence in me entering this trade was paying attention to my supporting time frame, my 15-second time frame, and what it was doing. Okay, so that's a note for me. All right, moving forward. All right, and just by showing up today, right, I'm 1% better now. I'm 1% better. First hour of trading is behind us. I'm gonna go ahead and delete this one so we can watch. I don't want too much on the chart, it looks nasty. Obviously this setup was in line with our weekly program, but it's going against our daily program. It would have done what it needed to do for me. Coolio. In trading, right? In trading, fear of losing often arises from uncertainty about how much money could be lost on any given trade. This is what comes when you don't have predefined exits. Okay, that's where, like I was talking about, when you don't have predefined exits. All right, predefined stop, predefined entry, predefined exits. All right, it brings emotions into it. It brings that fear and uncertainty. Okay. This is where risk to reward ratios come into play, offering a systematic approach to managing risk and removing emotional fear. Okay, the risk to reward ratio is a powerful tool that helps traders maintain profitability even with low win rate while reducing the emotional toll of losses. Okay, so we talked about common mistakes to avoid. All right, now we're talking about, what does that PowerPoint say over there? Because I can't even see what it says on there. Now we're going to talk about, okay, so I need to add fear, conquering fear of losing here. Cool. Q. So what is a risk to reward ratio? Okay, what's a risk to reward ratio? The risk reward ratio represents the potential reward a trader stands to gain for every unit of risk they are willing to take. All right. For example, a 1-to-3 risk to reward ratio means that you're risking $1, all right, for the potential to gain $3. A 1-to-2 risk to reward ratio meaning you're risking $1 for potential to make $2. All right. It's just what you're risking and compared to your reward of the trade. Okay. Let's say you're risking percentage rise. What I'm risking right now, I'm risking 0.25% of my account, right? But if I'm going for a 1-to-2, right, then I'll be risking 0.25, right, to make 0.5, which is times 2 of it, right? 1-to-2. How the ratio works, all right, is predefined levels, right? Before entering a trade, a trader determines the amount of capital that they're willing to risk, all right, based on the stop loss level, okay, and potentially where the entry is at, all right. The potential profit target, take profit level, okay. If you risk $100 on the trade and target a 300 reward, you have a 1-to-3 risk to reward ratio. Yeah, quite simple. That's what risk to reward ratio is. It's basically this. Put a long tool right here. So for this setup here that we're watching, right, risking 0.25 of our account size, it would have allowed us one contract coming out at -1. Okay, here we have a 1-to-1 risk to reward ratio. So we're risking 250, all right, to make 250. Obviously for me, I'll be getting out at one handle below, so I would be below 1-to-1, so it'll be like a 1 to 0.9%. It's not really a 1-to-1 right now, but obviously at that -1 on the dot, okay, is a 1-to-1 risk to reward ratio. Now if I wanted a 1-to-2, we're looking at -2. We're looking at -2. So if it hits -2, all right, it would have given us a 1-to-2 risk to reward ratio, risking 250, all right, to make 500. So let's see if we get that. Let's see if we get that in this setup here while we're here. And that's basically risk to reward ratio. It's not something that's, for me personally, is a big factor in my trading. Okay, I don't really pay too much attention to it, but like I said, as a newbie coming in here, it's a very useful tool, very powerful tool to help you conquer the fear of losing. Okay, because the probability will always be in your favor, all right, as long as you have a favorable risk to reward ratio. But somebody that has over 2 years of experience, they're accustomed to the losses, all right? They're accustomed to the losses, and it's not something that should be fearful to them, right? Because we all know it's the only thing promised to us. So why risk to reward ratios matter? Why they matter? Okay, this will be good to see this. Why risk to reward ratios matter, all right? First, profitability. Enunciate. Rewind. Profitability with a low win rate, okay? As you can see from the chart on the screen there, okay, even with a low win rate, a strong risk to reward ratio like a 1-to-3, right, can still yield profits, all right? With a 1-to-3 RR, you only need a 25% win rate to be profitable, right? Meaning you can be wrong 75% of the time and still make money, okay? So this is how risk to reward ratios minimize, all right, or attempt to diminish fear of losing, right? Because the probabilities are always going to be in your favor, right? And like I said, with a favorable risk to reward ratio, you don't need a high win rate, okay? So second, controlled losses, all right, reduces fear, all right? By setting a predefined risk per trade, example 1-to-2%, all right, if of capital, if you are new, if you have less than 2 years of experience, I say stay at 1% and below, okay, and then work up incrementally. Traders know their maximum loss, removing uncertainty and fear, right? Is the uncertainty is what causes you to do silly, stupid stuff when you don't know what's on the other side, right? That's what leads to fear, right? But once you remove that, once you know, hey, this is how much I'm going to this trade risking, right? So if this trade goes against me, I'm losing this much amount, and I'm content and I'm happy with it, okay? It takes away the fear, right? It takes away the uncertainty, right? It takes away your risk, really and truly, okay? Because you already have a predefined and understand, hey, this is how much I'm always going to be losing in a trade, all right? Thirdly, focus on probabilities, not outcome, okay? Trading with a favorable risk to reward shifts the mindset to thinking in probabilities, right? Not individual trade results. Maintaining a favorable risk to reward ratio gives traders a mathematical edge over time, right? The house edge, right? This is our house edge, okay? Every casino has a house edge. This is what makes them their money, right? And this is our edge here in the market, okay? Even with losses, the winners compensate for them, ensuring long-term profitability, okay? So this is our mathematical edge. This is our house edge in these market, okay? We are the house edge traders, okay? This is our house edge, all right? 4, confidence in risk management, right? A clear risk to reward ratio helps traders manage emotions, knowing that losses are part of the process and can be overcome with proper risk control, right? This is the importance and why risk reward ratio matters. But like I said, it's not the end or be all, right? If you have, always going to say, more than 2 years of experience, right, then it's not a big deal. It's not like a big factor, right? You don't have to mainly focus on risk reward ratio. It's not, for me, it's not a huge factor in my trading, okay? All right, but that's just because of my experience level, okay, where I'm at, all right? But initially, to overcome the fear of losing, all right, is imperative to initiate or start off with a risk reward ratio, okay? But as you can see from the diagram, you don't need a high win rate, right? When you have a favorable risk to reward ratio, you don't need a high win rate, right? For a 33% win rate, you only need a 1 to 2 risk to reward ratio, right? And as obviously you increase your experience and you increase your understanding and what you're looking for in price, and your win rate increases, right? You don't have to rely on risk to reward ratio. You know, as you can see, the higher your win rate is, right, the less your risk to reward ratio can be. Like if you have 50% win rate, you just need a 1-to-1 to be profitable, right? If you have 60%, you're looking at 1 to less than 1 to 0.7, right? Just like I just talked about here. At -1, I would be below 1-to-1, but that's fine for me, right? Because I have the experience. I have the enough data behind my model and my precision protocols to understand that my win rate is up there, right? Is up there. So I don't need a high risk to reward ratio, okay? But that's from experience and data collecting and building confidence in my trading edge and what I'm looking for. Thinking in probabilities, all right? Not certainties, okay? Risk to reward ratio are critical to a long-term success in trading, helping to manage and minimize losses while maintaining profitability. By focusing on risk management and setting favorable risk to reward ratios, traders can conquer the fear of losing, think in probabilities, and thrive even with lower win rates, all right? When you know your downside risk and have a clear plan for each trade, fear diminishes, allowing you to trade with confidence, right? Like we talked about yesterday during Trading Edge Tuesdays. You need to have a plan for your risk management, right? You need to have a plan for your trade management and for the account, all right? And when it comes to risk management, you need to have a clear plan in place. We talked about this yesterday, okay? Give you a blueprint in a plan that you can actually follow, okay, and adjust to you and your risk tolerance. So even with a low win rate of let's say 25%, right? You're still profitable, right? Because you have a 1 to 3 risk to reward ratio, which ensures that the winners offset the losses, okay? This shows the importance of a good risk to reward ratio in trading, all right? Then, next thing you must do, you must know how to flatline how to mitigate risk, all right, and flatline equity drawdown, all right? How to mitigate risk and flatline equity drawdown. Came back down to the low. Appreciate market structure shift here, but nothing for me to do. Confirmed it here. We're watching it. We're watching it. Sorry, excuse me. So now that you know the common mistakes and what to avoid, and that we shouldn't fear losing because the probability is on our side, we have because we have a mathematical edge. How do you reduce risk, right, and flatline equity drawdown, right? In this game, you have to be able to absorb losses, and this is exactly how you do just that, right? Like we talked about yesterday, you need a risk management plan, right? You need a risk management plan, okay? Your procedures and protocols should ensure that no single trade or series of trades can significantly impact your account, right? Capital preservation is key. That is our number one job here, all right? We are money managers, all right? It's our job to manage the money, okay? We have to protect the capital at all costs, okay? And risk management is our shield to doing that, okay? So you need a risk management plan, right? We went over this yesterday, but we're going to reinforce that here, right? You need a blueprint. We're going to go back over the blueprint, right? So starting out, right? Risk no more than 2% of your equity, all right? This is the industry standards, but I'd say, like I said yesterday, if you have less than 2 years of experience, all right, you want to stay at 1% and below. 1% and below, and then work your way incrementally. As you gain more experience, you collect more data, and you put more time into what you're looking for, all right, and what you're doing in these charts, okay? Have a model that offers a 1-to-3 risk to reward ratio, right, starting out, okay, because that means you can be wrong 75% of the time and still be profitable, right? You don't need to be an ace, you don't need to be a sniper, right? You don't need to be a sniper initially, right? But obviously you work your way towards that, right? But having a 1-to-3 risk to reward ratio allows you, right, to be profitable and have a low win rate. After a loss, all right, cut leverage, or after a number of series of losses, reduce the leverage, all right? Because our job here is to not have sharp incline and decline in our equity drawdown, okay? Is to manage that, flatline it as much as possible. And the way we do that is by when you take a loss, or when you take a series of losses, you reduce your risk going into the next trade, okay? Because you're preparing for the next loss. That's our job here, preparing for that next loss. This is how we flatline. This is how we mitigate risk and flatline our equity drawdown, by reducing risk after a loss, okay? Also, after consecutive wins, right, you want to reduce your risk as well, okay? Because you don't want to be on a high and thinking you can keep increasing your risk, and then that next loss comes and you've just given back a majority of your profits, okay? So you're always preparing for that loss. We're always preparing for that series of losses, because that's the only two things promised to us, okay? So after a consecutive winning streak, right, it's imperative, right, that you reduce your risk, all right? Always keeping that loss in the forefront of your mind, okay? So for me, what I plan to do is, obviously right now I'm at, I can't even speak this morning. I'm at my lowest risk leverage, okay, which is 0.25% of my account size, okay? As I gain more experience, all right, and build more confidence, right, I'm going to increase that, all right? And obviously I'm working my way to 2%. 2% is going to be my max cap, all right? And then if I take a loss at 2%, I'm going to reduce it back down and keep going down until I go to my lowest leverage, and then I work my way back up. After 5 consecutive wins, right, 5 winning trades, I'm going to restart my clock, all right, go back to 2.5 and work my way back up to 2, okay? So that's how I'm going to play this game. It's like a little mini game that I'm playing with my risk reward, right, to manage my equity curve, okay? Also have a maximum losses per day, right, which comes with maximum risk per day, per week, per month, right? And when you hit those limits, you're done trading for the week, for the day, and for the month, all right? Don't over push it, don't overdo it. Have a different account doing other things, okay? But for one particular account, be strict on what you're doing on that account, okay? So that's how you obviously mitigate risk, all right, and flatline equity drawdown, by having a risk management plan. The same plan that we talked about yesterday, okay? It's the same plan, we're enforcing it, all right? Risk management is the holy grail of trading, all right? It's important that we go over and over and over and over and over again, okay? As traders, all right, we understand that we're money managers, right? These are the characteristics that every great money manager must embody, right? These are the characteristics you must have to be a good money manager, right? Not just for yourself, right? And if you're obviously going to scale to a hedge fund, to other people as well, right? So these are the traits of a great money manager, right? The professional money manager understands that losses are a cost of doing business, okay? In any other business endeavor, business venture, right? There's cost that is associated with that business, all right? And in trading, our cost is losses, right? Loss is the cost of doing business. It's part of the job. Is the only thing promised to us, right? It's like even a 9 to 5, right? When you buy gas to go to your 9 to 5, that's a cost of doing business. It's a cost of working a 9 to 5, right? You pay it, and it's just something that you have to do. And it's the same thing here. Losses are just like gas. You paying for gas, right? To get to work, right? It's part of what you need to do to get to the next phase of your life, to maintain your life, right? To get to that money, right? So that's the same way that you need to be looking at losses in trading, okay? 1050 macro. We would have been out of this trade already, but we're seeing what else it could potentially offer us. It's not looking like it might be offering us anything else. But let's see what 1050 macro has in store for us, okay? We have time on support and time frame right now. Waiting for time on our main entry time frame. Obviously, this could be a retracement, right, into a discount to then continue lower, right? So, because we're in a sell program for the day, all right? So that's what we're looking to be a seller for today until we trade back above this high, right? Until we do that. So if we don't trade back above this high, then we're still in a sell program, right? See how the if this, then that, right? That's how I'm always looking at the market. If this happens, then I'm anticipating this to happen. But if it doesn't happen, all right, then I want to see this thing happen, right? I'm thinking like IPTA, you know what I mean? I'm thinking like still would be in this trade, right? We personally would have been out with that one contract, but we're watching to see, all right, what else they can offer us here. Okay, so traits, we're talking about traits of a great money manager, all right? Next is appreciate percentage over dollar gain and loss, all right? We're percentage focused and not dollar amount focused, okay? We don't care about the dollar amounts. For us, it's more about paying attention, right, to the percentage of our account, right? Like in risk, I'm always looking at it in percentage. In profits, I'm always looking at it in percentage and not the dollar amount of gain, okay? Doesn't matter the dollar amount, okay? As long as the percentage is consistent, all right, that dollar amount can change, right, depending on the leverage and the account size, okay? So they appreciate, great money managers appreciate percentage over dollar gain and loss, okay? Learn to limit trade frequency. Learn to limit trade frequency, okay? The more times you're in the market, the more opportunities you're given IPTA to take back your profits, okay? So learn to limit trade frequency. Don't try to be in these markets each and every move, each and every session. Like this trade here, right? It hit all my criteria and I could have been in it and it would have been a profit, but for me personally, it wasn't giving me the confidence. I wasn't seeing that V-shaped entry. Obviously we saw it on the support in time frame, but I wasn't seeing it on the 1 minute, really and truly. Oh, I did end up leaving a fair value gap busy here. Interesting. If I had noticed that, I probably would have felt a different type of way about that trade. But still, right? Learn to limit trade frequency, right? The less you're in the market, the less of your money the market will take. Next is be content with enough, which is in conjunction with learning to limit trade frequency, right? Be content with enough, right? Starting out, you don't need to be taking each and every setup that you see, right? Once you have a winning trade, be content with, taking something out of the market today and come back another day and just build upon that, right? You don't need to be constantly taking trades, all right? You don't need to be like me trying to take every macro trade. You don't need to be doing that initially, right? As you build more confidence and gain more experience, all right, collect more data, you can do that, but it's essential, it's imperative to be content with enough for the day, okay, and just come back another day. Be content enough with like losses and winners too. It can go both ways. Keep the monthly return on the focus, right? Keep the monthly return on the focus. Our main focus here is the monthly return and not the daily and the weekly. Obviously, we pay attention to what's happening in the day and the week, but for us, really and truly, our main focus, all right, as a great money manager, is focusing on the monthly return, right? Or the monthly percentage, right? For me, it's 12% for the month, which is 3%, which is broken down to the week as 3% each week, all right? Which adds up, all right, to the 12% for the week that I'm looking for. It's really 10, right? My goal is 10, but obviously 12 gives me a buffer, okay? Be patient with drawdown recovery, right? This is a big one. Be patient with drawdown recovery. You need to crawl out of drawdown, right? Don't try to rush your way out of drawdown just because you're in drawdown, right? None of us like being in drawdown. I hate being in drawdown. Right now, I have one account that's still in drawdown, right? But I'm taking it slow. I'm not trying to rush to come out of drawdown, okay? Because that's how you need, that's a fast track, all right, to blow an account, all right? And that's not a trait of a great money manager, right? You have to be patient with your drawdown recovery. Take your time, right? Take your time. It's going to take time, all right, for you to come out of drawdown. Think in probabilities, not in dollar signs, all right? Think in probabilities and not in dollar signs, right? The probability is that we have a mathematical edge and we have to just let that edge play out, okay? We can't be too focused on the money and then risk, right, that edge that we have, right? But changing something and risking the edge that we have, okay? We have an edge. It's just about letting that edge play out, all right? And not letting the money influence you, okay? Paying attention here, all right? We have time, we have price. For retracement, right, I'll need to see sell side taken here, market structure shift back above, right? We'll confirm that retracement's up. Right, for continuation now, I'll need to see buy side taken. Since there's no inefficiencies in this leg, I'll need to see this buy side taken and then market structure shift back below, right, to be interested here in anything. So just depending on which side it takes first and which side it goes to take will let me know obviously what step 2 stage, what kind of setup I'm getting here. Manage to keep risk below 3% max, okay? These are traits of a great money manager, right? They manage to keep risk below 3% max, okay? Like I said, if you're new, stay at one and below, okay? But as you build more experience, obviously you can go up, but you don't want to risk any more than 3% max within a trade, okay? No more than 3% max, okay? Doesn't matter what level you're on, okay? All right, lastly, all right, great money managers follow a money management plan and model. They're not just winging it. It's not something different each and every time they're in a trade or in a setup, okay? It's the same thing that they're doing. They have a plan, they have a model that they're following for each and every trade, right? And they're just following that, right? They're not like making it up as they go along and how they feel on the day or with the price action, okay? They're following a money management plan and model, all right? It's imperative, okay? These are traits of a great money manager, which is something that obviously we're striving to be, or I'm striving to be a great money manager. Okay, so these are characteristics that I'm working on building, all right? I think I got some of it down packed. Some of it I do, catch myself not working on, but these are things once you know it, right? It's something for you to work on and improve, right, in your trading. Nothing for me to do here in the charts. Right now we've taken a short-term low below it, all right? For me to be interested in anything, I'll need to see a market structure shift back above, It doesn't give me that. Doesn't give me that. Nothing for me to do. So risk management equals longevity, right? It is the key to long-term success in this industry, on this battlefield, right? The market is unpredictable, but your approach to risk can be methodical and controlled, okay? Manage your losses, preserve capital, and you will live to trade another day, all right? Risk management is not just a shield, right? It is the foundation for sustainable trading success, all right? Begin by implementing a solid risk management plan in your trades, all right? Master risk, and the success will follow, right? This is the holy grail of trading. Bear with me. I would be interested here if we get market structure shift back above this external liquidity. I'll be interested in a retracement, which will be in line with our weekly, right? But going against our daily. Look at that, it's giving us 2 contracts. That's crazy. Predefined risk, right? Predefined stop, predefined entries. Wait in. Obviously 15 seconds entry would be here. Be getting tagged in there. I did say I was going to use the 15 seconds as my entry points there, but it's okay. It's gone. Be maybe moving down as we progress, right? I'll get in one over here on the 15 seconds, and then another one on the 1 minute. I'll be interested in a retracement buy here. Would have been tagged in it on the supporting time frame already, which is a valid entry because I saw a 1 minute liquidity raid below the external liquidity. Okay, so an entry on a 15-second market structure shift back above here is 100% valid. But this is something I've back tested. Okay, so I did say moving forward that's how I would be doing it, but it's all good. Is that rain outside? That is rain outside. So this does bring us to the end of risk management here, okay? All right, make sure to have your risk management plan and model written down, all right? It must be referred to on a daily basis before, after a trade and or trading session, okay? Waiting here to pull the trigger, all right? We haven't got the confirmation yet. We've got it on a low supporting time frame, but not on the 1 minute yet. If it does give it to me, I'll be pulling the trigger. I'm feeling no type of way about it, right? I'm following my procedures, my protocols, my processes, all right? The outcome is out of my hands. There we go. Pulling that trigger. The trigger has been pulled. Oh, both of it is coming off a -1. which is 5 to 50 right there. Tagged in there, all right? Rest is down my hands. Now we just watch the price action. See if we see the characteristics that we need to see to let us know that we're on side or offside, okay? Pretty much all we can do. Once we enter the market, it's out of our hands. We accept the risk, all right? We already have a predefined risk. Now if this trade comes and takes me out, will be for no more than $250, and I'm okay with that. I'm A-okay. There's no fear, there's no uncertainty here. Based on risk to reward, let's see what it is. Less than 1 again. Usually my risk to reward ratio at -1 is at 1 or less than 1. Oh, we have a higher one here. Come back down into first presented fair value gap on a 15-minute. Are we respecting that? No, we got a closure below what's going encroachment. Now market structure shift back here, taking us out of the trade, right? We'll confirm a continuation sell setup. So either way, we're paying for premium insights, right? And losses, this is why you don't need to fear loss, right? Because for me, when I take a loss, it's giving me information. It's just a cost of doing business, right? Cost of paying for more insight in price action, okay? It's telling me, hey, obviously, this is what you anticipate, this is what you thought was going to happen, but nah, this is not what we're doing today, okay? There's no need to fear losing, right? Once you understand that is the only thing promised to you in this game, and that, you know, you just need to put precision protocols in place to weather the losing trades, you don't fear the losses anymore, right? You don't fear them. And you have a predefined risk, right? That if I do take this loss, I'm losing this amount and I'm okay with it. It's something that I've demoed, is a risk tolerance that I've built over time in demoing and being okay with taking this amount of a loss, right? So there's just no emotions, man. We're like IPTA right here, right now. It took me a long time to get to where I'm at today, I'm not gonna lie, right? It's not easy. Everything that we just went over today is not easy, right? But it's just Knowing them and being aware of them, that's the first step, right? And then trying to avoid the common mistakes and pitfalls, right? And just being aware of them and putting procedures and protocols in place, right, that eliminates fear and uncertainty. And that's all you can do, really and truly, right? Right now, I've done my part, right? I'm leaving the heavy lifting to the model, to the market, and the trade management. And the risk management, right? So, nothing for me to do here. Let me see what the... If it does give me a continuation sell, I'm interested to see what that's looking like. Hold on, where's the low of this? I really don't like trading close to 1050, right? It just means I have to be here a little bit longer than I want to be here. Anyway, it would be one, or allow us one contract. Or allow us one contract. Price is showing respect for this inefficiency here, alright? These are characteristics that I'm on side. Is staying above consequent encroachment of this inefficiency, okay? Characteristics letting me know that I'm currently on side on this trade, alright? And there's nothing for me to worry about, alright? Just let the price action do its thing. We're entering the wild, wild west soon, though. We're entering the wild, wild west soon. I'm excited to watch price action this afternoon and see what it does, alright? If I see something clean, I'll be in there, but I'm not in a rush. I'm not in a rush to do anything during this wild, wild west. $11.11. Now body closure, right, below mean threshold and below this inefficiency here would give me a warning sign, okay? And once we get a body closure below this mean threshold, that would be like, yeah, you're done for, mate. You're done for. You're done for. We're not going where you want me to go. We're not doing it. Above the range right now is all-time highs, which is currently a open range session buy side. It's current draw on liquidity for price, okay? Is that below? Let's see, hold on. It's 672.50. Do we trade below it? 672. Oh, okay, yeah, we do trade back below it here. A market structure shift here now. A market structure shift here would 100% reduce probability of my setup here, because it would confirm a continuation sell setup. So I don't want to see this low go, because if that low goes, the probability that we're offside increases significantly. Because then, right, we would have traded back below, back above, took buy side above it, right, and there will be a market structure shift back below it. That's confirming a continuation setup there. So if that happens, all right, we're gonna wrap up. We can do a trade performance review now anyway, because I won't be taking any more trades for the session. So we can go ahead and get that out of the way. Prepared to wrap up here. Prepared to wrap up here. What I did well today, all right, is that I showed up, all right, I got 1% better, gained experience, learned lessons that I'll take into my next trading day, next trading session. Definitely collected more data on my supporting time frame and how I can further use it, right, as a supporting actress and actor that it is, all right, to support the 1 minute time frame. When the 1 minute doesn't look too clean to me in a sense that I didn't this morning, okay, I can use that 15-second time frame to back up that 1 minute setup. Okay, so definitely go 1% better today. Okay, what I fell short today will be my wake up time and morning routine. Okay, but chart wise, I showed up today. I did my job, I followed my processes, I followed my procedures and protocols and didn't deviate from it. Okay, so very happy and pleased with myself about that, right? Do need to work on that wake up time though, but it's okay, it's all right. It's the first one for today, for this week, no? Where I fell short on both. How I can improve on next day, next trading session is just keep showing up, right? Keep seeking excellence in everything that I do. I have to confirm that the mic is on. I'm scarred. Don't let short-term adversity, all right, series of losses deter me, distract me from what I got going on, all right? I think I got a solid foundation in terms of what I'm looking for in pricing my processes. Just need to be disciplined enough to keep following them, all right, and not, fall into the common pitfalls, common mistakes that we talked about today, okay, in terms of my risk management, all right? I have a plan and procedure in place, okay? Just need to let it do this thing and let the data allow me to adjust when I need to adjust, all right, based on the data collected, based on the data I'm getting back. Like I said, if we take that low, right, I'm not 100%, but probability of me being offside significantly increases, okay? So I'm aware of that going in, okay, and it is what it is. Yeah, keep taking small steps in the right direction. Okay, eventually we'll get to our destination, right? Pretty much. And yeah, it's been a solid day for me here, won't complain. Solid week so far, all right? Solid week so far. I'm seeing the fruits in my labor, all right, over the 6 years of studying and learning these candlesticks and how they print and how they move. Yeah, this month so far, this week has been a really eye opener, right, in terms of the possibilities and the potential of just being consistent in following your precision protocols, really and truly. What you see here is an amalgamation of aiming to be 1% better every day for 6 years. And that's what you're seeing here today. So it's been a long time coming, but you only fail when you quit, right? You only fail when you quit. So don't quit. It's simple. Keep showing up. Even in the losses, even in a series of losses, keep showing up. Understand why you're doing this, where you're going with this, okay? Why you're here. Keep the target, the goal at the forefront of your mind, and just keep showing up. We're done at 11:30 anyway. That's our schedule. 11:30. All right, from 9:15 to 11:30 is our schedule. I don't like to stay here for the duration of that time, but hey, sometimes we have to. Sometimes you have to. Sometimes you get overtime here. You get overtime. OT. We're about to smash that. I would be interested in a sell, but I can't get in because I'll get a strike saying that I'm hedging, motherfuckers. But anyway, we're taking that market structure shift back below the external liquidity. Okay, so for me, probability in my trade just reduced. The amount side in my trade reduced significantly for me. Okay, but it's not over till the fat lady sings. But from the characteristics right now, the fat lady might be singing on my ass. She might be singing on my ass. We're going to get a body closure below consequent encroachment. All right, we're also going to get a body closure below this inefficiency. We're going to come into this inefficiency now, and then it will be like, game over. This is a warning sign right here, right? It's a warning sign letting me know potentially that I'm offside, so prepare. Prepare for that loss because it's coming. All right, prepare for it because it could potentially be coming. But that's okay because I know how much I'll be losing, right? There's no fear, there's no uncertainty here. I know exactly how much I'll be losing if this trade comes and takes me out right now. So far, we're still respecting this inefficiency. I like that for me. I like that for me. I don't like the fact that we got that market structure shift below though. But so far, respect for this inefficiency. I like that we left a small portion of it open as well. I like that for my current trade. Right, I would like to see price run away from here. All right, come and take this buy side up here. Run this short-term high, run this short-term high. Okay. I want to see a blue stretched out limousines, as ICT will say. He says black, but my limousine is blue and white. I want to see big stretched out blue limousine. Me not like that. Me not like that. Don't do that. Don't wick on me. Don't wick on me. Don't wick on me. You gonna do that to me, Ipta? Don't wick out on me. Yeah, I don't like that. Me not like it. We want to see big stretched out blue limousines, not white ones. Not white ones. Yeah, we're done for, innit? I'm watching this continuation sell though, going into lunch session, because it's about to come and smash me out. It's only a matter of time though. Damn, this would have been 2 trades, 1. That's four consecutive wins in a row, I'd say. This would be 5. But you know, it's alright, it's alright. I ain't mad at it. I ain't mad at it. We restart and we come back again, innit? We restart and we come back again. Yep, we closed below this inefficiency here, alright? So less probability in my trade right now. From that market structure shift down here, all right, it was already called, all right, that the loss was coming. Okay, it was already called that the loss was coming. So this is where the traits of being a great money manager comes into play. Taking that L right there. Thank you very much. Be content with enough. Limit trade frequency. Those are the 2 things that I'm currently working on, right? I'm working on being content with enough and limiting my trade frequency, okay? But anyway, let's see the outcome of that trade. 233. When we take the losses, it's fat. It's all good though. It's all good. Losses are the only thing promised to us, all right? We're watching this continuation sell going into lunch session. If I had another account from a different company, I would have engaged in this sell right here. Okay, it would be giving us -1 right now. Let's see how many contracts it would have allowed us in though. Like, this is what I mean. This for the next phase of progression, right? When I see things like this, right, letting me know that, hey, I'm potentially offside, or another 2 contracts. Nice. Anyway, the 2 contracts will both be coming off here. Would have given us about less than 1-to-1. Fair enough. I'm watching this going into the remainder of lunch. See what else it offers us. Okay. See what else it offers us. But for me here, that's it. Let me get this snapshot. Let's not avoid the losses, right? Let's not only focus on the winning trades that we talked about today. Common mistakes and risk management. Focusing only on winning trades. Because losses are part of the game. Yeah, the only thing is guaranteed to us here. So don't turn a blind eye to them. Pay attention to them. Right now, what I took from this loss, right, is that once this continuation sell setup was confirmed, potentially I should have took one contract of the trade there. because obviously my probability reduced significantly. Hold on, let me grab this before I continue chatting. That was my warning sign, right? To take one, because it allowed me 2 contracts, right? That was my warning sign to take one off this trade, and that's something that I would say I fell short in today. All right. So when we go back to the trade performance review, now I can go back and do a review, right? This is something I potentially fell short on today, right? Once we confirmed that continuation sell up, which I clearly pointed out and said it reduced the probability of my trade significantly, right? That was my cue here, all right, to take one off the trade because it allowed me 2 contracts, right? That's something I need to keep. I got the image already, right? Because I wanna put this back on to see what else this trade offers us here. I'm targeting sell side down in here, okay? Because it did allow me 2 contracts. Obviously, I've gone so used to just being in one contract that, you know, I don't really need to take something off, but I need to bring it back, right? Keep reminding myself that, hey, I'm in 2 contracts, okay, and I'm potentially getting a signal, a sign that I'm offside, so let's take one off and then leave, you know, the one remainder here. Obviously, that would have reduced a little bit of the risk, right? I still would have took a loss regardless, right? But it would have reduced the amount of risk that I took in this trade, okay? So yeah, I would say that's something I fell short, and that's something I can do to improve for next trading session, next trading day, okay? But yeah, solid day from us here at the Trader Capital, all right? We're seeing what we need to see in the charts, and the candlesticks are doing what we anticipate for them to do, okay? So yeah, I'm content, I'm happy, I'm not mad at anything right now today, so that's it. Let's wrap up here. We're entering the wild west. I'm excited to navigate it, all right, because I think I've collected enough data on how to navigate it, and what I'm doing in the charts, it works. It's proven itself efficient, okay? So excited to just see how I can navigate this wild west. NFP Wednesday, risk management Wednesday. I hope you took a lot out of today in terms of when it comes to risk management, because this is the holy grail of trading, okay? This is what will keep you in the game long after everybody else has quit, all right? Risk management. So have a plan and procedures and protocols in place for your risk, and yeah, reduces uncertainty, fear and greed, and leads to longevity in your trading career. Anywho, let's wrap it up. Before we wrap up, there was a time that I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all 3 pillars, the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading. Happy bloody hunting. Remember, you only fail when you quit.